Are you tired of worrying about the ups and downs of the stock market? What if I told you there's a way to build wealth without the stress? Imagine a world where your investments are not only safe but also growing steadily. A world where you're not constantly checking your portfolio but rather enjoying life, knowing your finances are in good hands. Intrigued? Well, that world is closer than you think. Stick around to learn the secret of passive index fund investing. So, what exactly are passive index funds? Well, in the world of investing, passive index funds are a bit like a mirror. They reflect the performance of a specific market index, be it the S&P 500, the Dow Jones, or any other index across the globe. Rather than trying to beat the market, they simply aim to match it. Their role in the stock market, it's as simple as it is crucial. They provide a way for investors of all stripes to gain exposure to a wide range of companies with a single investment. And they do this with remarkable simplicity and effectiveness. You see, when you invest in a passive index fund, you're essentially buying a tiny piece of every company in that index. There's no need to analyze individual stocks or time the market. You're just riding the wave of the overall market performance. In essence, passive index funds offer a simple and effective route to investing in the stock market. Let's talk about diversification. Picture it like this. Instead of placing all your eggs in one basket, you spread them across several. In the investment world, diversification means spreading your capital across different types of investments to reduce risk. Now here's where passive index funds come into play. They offer a slice of hundreds, sometimes thousands of different stocks or bonds, providing an easy route to broad diversification. So, instead of picking individual stocks, you get a piece of the entire market. With passive index funds, diversification becomes simplified. But what about the growth potential of passive index fund investing? Now this is where things get exciting. Passive index funds, by their very nature, are designed for long-term growth. They reflect the market, and as history shows us, markets tend to rise over time. Consider this, the power of compounding returns. It's like a snowball effect. Your investments earn returns, those returns get reinvested, and then they earn returns too. Over time, this process can lead to exponential growth. Imagine a tree growing steadily, year after year, its branches extending, reaching ever upwards. That's the kind of growth we're talking about with passive index funds. It's slow, it's steady, but it's substantial. The long-term growth potential of passive index funds is not something to overlook. Now let's talk about costs. The beauty of passive index funds lies in their cost effectiveness. Unlike actively managed funds, they aren't weighed down by high fees that eat into your returns. Think of it this way, every dollar saved on fees is a dollar that stays invested, working for you and compounding over time. The difference this makes in the long run can be staggering. It's like winning a financial marathon without breaking a sweat. Lower costs with higher rewards, that's the beauty of passive index funds. Ready to get started with passive index fund investing? The first step is research. Spend some time getting to know the market. There are several reputable index funds out there, such as the S&P 500, the Total Stock Market Index, and the International Stock Index. These funds are designed to track the performance of a specific market index, providing you with broad exposure to the entire market. Once you've chosen your preferred index fund, the next step is to open an investment account. You can do this through a brokerage firm or a robo-advisor. Both options offer their own benefits. A brokerage firm gives you full control over your investments, while a robo-advisor manages your investments for you, making decisions based on your risk tolerance and investment goals. Now, let's talk about how much you should invest. The beauty of passive index fund investing is that there's no minimum amount required to start. You can begin with whatever amount you're comfortable with. The key here is consistency. Make regular contributions to your investment account regardless of the market conditions. This strategy, known as dollar cost averaging, can help you build wealth over time. Remember, passive index fund investing is a long-term game. It's not about timing the market, but time in the market. Be patient, stay the course, and watch your wealth grow. With these tips, you're ready to start your journey with passive index fund investing. Let's recap the benefits of passive index fund investing. This investment strategy offers simplicity and effectiveness. It's a straightforward way to engage with the stock market without the need to become a financial analyst overnight. Passive index funds provide broad diversification, spreading your risk across a wide array of companies and sectors. This means you're not putting all your eggs in one basket. It's a safety net that many investors appreciate. Furthermore, passive index funds are a long-term game, and they offer the potential for steady growth over time, tapping into the power of compounding returns. This means your earnings generate even more earnings, the snowball effect that builds wealth. One of the key advantages of passive index fund investing is cost effectiveness. Lower fees mean more of your money stays invested, maximizing your returns over time. So, whether you're a seasoned investor or just starting out, there's a lot to gain from exploring passive index funds. It's your opportunity to take control of your financial future and start building a robust investment portfolio. Explore the world of passive index funds and start building your wealth. Subscribe to our channel for more investing insights. Don't forget to like and comment if you have any questions.